Hello everyone, this is Dare here. Hope you are well. Few months ago, we brought out a video. At the time, we were 1,000 subscribers. I am very glad to tell you today, we have now reached 10,000 subscribers. Hooray! Thank you so much, everybody that contributes to this milestone. I am glad that I can bring these videos to you. I really enjoyed it, and I hope that you guys enjoy and love it as well. So today we will talk about the commonly known indicator, the RSI. We will talk holistically about RSI, what it is. We will look at different trading signals that we can generate from RSI, overbought, oversold signals, divergence signals, failure signals, and trend signals. We go on to look at the period settings for RSI, and finally we will look into the RSI trend trading strategy. We'll go into a live chart to demonstrate that to you. So hold on, hang on there, enjoy this content. Right. So what is RSI? It is developed by J. Wells Wider in 1978. The relative strength index is a momentum indicator that measures the speed and change of price movement. It oscillates between 0 and 100. Traditionally, and according to Wider, RSI is considered overbought when above 70 and oversold when below 30. So we have the overbought here, which is anything above 70 level, and oversold anything below 30 level. So this is the 30 level, and that is the 70 level. So this is the instrument. It could be anything. It could be euro dollar, it could be currency, it could be stocks, it could be cryptocurrency, it could be anything. So RSI will give you those indications. Okay. Other indicators developed by the same person, that is J. Wells Wider, includes the ATR, average true range, DMI, directional movement index, and the parabolic stop and reverse, or parabolic SAR. Okay, so now we will look into different trading signals that we can generate from RSI. So the first one is the overbought, oversold signals. We look into divergence signals, failure signals, and the trend signal. Okay. So the first one we are looking into is the overbought signal. The RSI indicator gives a signal for an overbought condition when the RSI line enter between 70 and 100 area. So anytime RSI goes above 70, we say it is in overbought zone, right? Overbought area. Okay. So this is 70 line, this is the 30 line. Anytime RSI goes above 70, we say it is in the overbought area. Okay. Same thing happens to the oversold region. So anytime RSI appears under the 30 zone, we say it is in the oversold area. Okay. So it means anytime it goes below 30 line, we say it's in the oversold area and is due for a reversal. Okay. So what are the pitfalls? What are the disadvantages of using RSI? So whenever the market exhibits a strong trend, the RSI loses its value, which leads to inaccurate overbought and oversold market indications. The RSI is an oscillator and therefore works best in an oscillating market. Okay. Price top and bottom can happen long after oversold and overbought zones reached, which simply means if you see RSI below 30 level, it's not a guarantee that as soon as that happens, price will immediately start heading up. Similarly, if RSI has gone past 70 level, does not mean that price is going to start heading down. Here you see this is a strong uptrend here. Price actually is still trending up. Meanwhile, RSI is reaching overbought level several times, indicating that we might reverse very soon. But there is no reversal. We just see the uptrend continue. Okay, so RSI indicator can remain oversold or overbought for an extended period of time in strong trending market, and therefore giving you many false buy or sell signals. So now let's talk about the bullish divergence signal. So we'll talk about the divergence signals. The first one is going to be the bullish divergence. Okay, so according to Wider, divergence signal a potential reversal point because RSI momentum does not confirm price. So the first one is the bullish one. So bullish divergence occur when the underlying security makes a lower low. So you see the security itself, the price is trending lower, making a lower low, right? But RSI does not confirm that. Instead, it is making a higher low. So RSI does not confirm, but it's making the higher low. So RSI is trading the opposite direction. Price is telling us we are going downwards. RSI says no, we are trending upward. So this is a bullish divergence, hence you see price goes up. Same thing with a bearish divergence, which form when the security records a higher high, but RSI form a lower high. Security records a higher high. From here to here, price goes higher. However, RSI dip lower. Okay, so if that happens, that means RSI does not confirm the new high, and this shows weakening in momentum. So there's a weakness in momentum, and hence we see price fall lower. So now let's look into the pitfalls, right? So before we get carried away or too excited about divergences as a great trading signal, it must be noted that divergences are misleading in a strong trend. So in a strong trend, let's say you have a downtrend like the one on the screen. So you see a lot of bullish divergences, but there is no change in direction. So you see we have a strong downward trend. Meanwhile, RSI is giving us bullish divergence, signifying there is going to be a change in direction. However, there is no change in direction. We still keep moving downwards. Similarly, for the bearish divergence, you see it shows us that we might likely see a reversal, a bearish divergence. However, price keep rising higher. So these are the pitfall disadvantages of RSI signals. So please note that as well. Now the next signal we are going to talk about is the failure swing. The failure swing trading signal from RSI. So Wilder consider failure swing as strong indication of an impending reversal. Failure swings are independent of price action. In other words, failure swings focus solely on RSI for signals and ignore the concept of divergence. So let's look at the first one, which is the bullish failure swing. A bullish failure swing forms when RSI moves below 30. So you have RSI here, which moves below 30. That is oversold area. It bounces above the oversold area. then pull back again, but this time hold above 30. So the second time of asking, it cannot go below 30 and goes on to break its former high. Okay, so it dips, RSI dip below 30, bounce above it, makes a high, and then try again to go below but couldn't, and stays above 30 and goes on to break its former high. This is a breakout for you. This is a buy signal. Okay, when you look at the bearish failure swing also, so when RSI move above 70, so RSI move to the overbought zones, all right, pulls back below 70, forms a low, all right, and it bounces but fail to break the 70 line, and then go on to break its own lower line it set before. Okay, so when it breaks its own prior low, that is a sell signal here for you. So this is a buy sell signal right at the point where it breaks its prior low. So this is the failure swing, bearish failure swing signal. Okay, now we look into the last trading signal from RSI. We call it RSI trend. Okay, in technical analysis for trading professionals, Constance Brown, that's a trader called Constance Brown, suggests that oscillators do not travel between 0 and 100. Okay, wow, doesn't travel between 0 and 100. That's what we have been saying so far. But Constance Brown is suggesting to us that no, oscillators do not go between 0 and 100. That Brown identified a bull market range and a bear market range for RSI. So it says there are two types of range, the bull market and the bear market. So let's look at the bull market. Okay, so it suggests that RSI fluctuates between 40 and 90 in a bull market. In an uptrend, it goes between 40 and 90. So that in a bull market, RSI will not touch the 30 zone. It just fluctuates between 40 and 90. 40 and 90, and uses the 40 to 50 zone as support. So you see this colored area is between 40 and 50 and is the support zone in an uptrend. So anytime RSI dip into that area, that is a signal for you to go long, to join the trend. Okay, same thing apply to bear market. So RSI tend to fluctuate between 10 and 60. So RSI in a bear market will not reach 70 line, will fluctuate between 10 and 60, between 10 and 60, and it will form 50 to 60 zone as its resistance. So you see it's a long bearish trend, and RSI didn't go near 70. It reaches 60 and then go downwards from 60 to 10. Okay, now you use the 50 to 60 zone, this colored zone, as your resistance. So anytime RSI dip into that zones, that is opportunity for you to short the market. So now let's talk about the settings for RSI. The RSI period is very important concept. Wilder himself used 14 period RSI. I know there are a few other places, other people, traders that changes that settings, but for our purpose today and for the strategy we will discuss next, we only use 14 as our setting. Okay, so guys, let's talk about the RSI trend trading strategy. It's a very simple strategy, has only two steps. Okay, step number one is to spot the trend of the currency pair. Okay, And the second step is to trade only in direction of the trend. Okay, so if the trend is up, you buy dip. If the trend is down, you sell rallies. So that is the theory. Now let's go into the practicals. Let's go into the chart to see how this trading strategy will work. Good. So I'm now in my charts. This is USD chef, which is the US dollar and Swiss francs. It's a 1 hour chart. This is the current price today. This is where we're actually at the this is live market. We have seen that this pair has been in a long uptrend for the last 2 weeks. Okay, this is about 18th of April. So it has been in a long uptrend. So we have drawn a trend line. As you can see, that's a trend line. The trend line is still intact. It's not broken. So this strategy works when you have a trend line that is supporting the price. Okay, this is a bull market, right? So our RSI, let's check our RSI settings. So we have 14 period RSI, and we normally have 30 and 70 as our overbought, oversold levels. So in a bull market, as we have discussed, RSI will move between 40 and 50 and use it as a support level. So let's see what happened. So these 40 and 50 zones are the support area for RSI here, or for the price. So each time price dip or RSI dip into that zone, you buy. RSI dip into that zone, we buy. RSI dip into that zone, we buy. RSI dip into that zone, we buy. Same thing here. As you can see, as we are recording this video, this is another opportunity for you to actually join this long uptrend, because we have seen RSI have dipped between 40 and 50 zones and is going up again. Opportunity for you to go long. Okay, now let's look at the bearish trade as well. So this trade is euro dollar. Also, it's a 1 hour chart. As you can see, we have been in a downtrend for almost 2 weeks as well, and this is our current price. We've been in a downtrend, and in a downtrend, RSI will go between 50 and 60 will be the resistance zones. So each time prices go into that zone, you will sell. So we see prices goes into that zone, we sell here. Prices got into that zone, we sold. Prices got into that zone, we sold. Here as well, we sold. So we have 4 opportunities to go short to join this market here. So this is a very simple, very basic, simple strategy. However, you need to make sure that the trend line is intact. The trend line is not broken. So when you draw a trend line and see that it is intact, prices are respecting the trend line, either the uptrend or the downtrend, then you know you have opportunity to use this strategy. So I have made 2 templates for this strategy. There's one template for the uptrend, because you know our RSI will be 30, 40, 50, and 70 levels. And we have the second template for the downtrend, because RSI this time will be 30, 50, 60, and 70. So if you guys, anyone that needs this strategy, this template, let me know. Make a comment on the video as usual. Include your email address, and I will send it to you as soon as possible. So once more, guys, I hope you gain something from this video. As I said earlier, I enjoy doing it, and I hope to bring more exciting videos to you very, very soon. All right, I'll be signing off now. Is Dare.